For the second time in 2 months, the Monetary Policy Committee is convening to address the media after its 2 days meeting. First, the central bank governor who heads the committee reels out its decisions. This includes to raise the monetary policy rate by 200 basis points, to adjust the asymmetric corridor around the MPR to plus 100 or minus 300 basis points, to retain the cash reserve ratio of deposit money banks at 45%, to adjust the cash reserve ratio of merchant banks from 10% to 14%, as well as retain the liquidity ratio at 30%.
The Monetary Policy
The governor of the central bank gives reasons for the decisions.
The considerations of the committee at this meeting focused on the current inflationary pressures and the need to anchor inflation expectations, as well as ensure sustained exchange rate stability.
Recently, the bank has continued to bear its mind on key issues that affect the economy. The Apex Bank boss seized the opportunity to clarify the bank's position on some of these issues.
For price discovery to happen, certain fundamentals or certain attributes need to be in place. And you would recall that there's been a whole myriad of different circulars that have come out over a period of time, which were designed to remove those distortions such that the market became a lot freer and the concept of willing buyer and willing seller became something that was a lot easier to establish.
And on the Binance matter that has recently dominated conversations.
In this particular case, the responsibility for regulating cryptocurrency is not our own. It isn't ours. It is strictly that of the Security and Exchange Commission.
The next meeting of the Monetary Policy Committee is scheduled for May 20th and 21st, 2024. Before that time, though, the central bank expects a moderation in the inflation rate. Sarah Chimugu, Channels Television News.
All right, joining us on the News at 10 to discuss more on this latest development. I'm being joined by the CEO of Financial Derivatives Company Limited, Mr. Bismarck Rewane. Great to have you on the News at 10, sir.
Thanks for having me.
All right, so we were here just last month to talk about the benchmark interest rate. Of course, then it was raised to 22.75%, but now the latest 24.75%. Are we tightening or actually choking when it comes to the this latest development, in terms of the economy?
That's the million-dollar question, right? It was 4 weeks ago, we went up by 400 basis points, and now we've gone up by 200 basis points again. But what we seem to forget is that for 7 months there was no activity. So what we did last time was catch up, arrears of interest rate hike, and now we've done it 200 basis points again. It is tightening, it's not choking, but you can't make omelette without breaking eggs. So the question is that, what's going to happen to inflation, right?
I think that question always
is a big
inflation,
question,
especially food inflation.
Food and core inflation. So definitely, we are beginning to see signs improvement. And one of the big things, especially, is one of the big issues that is troubling minds today is what's happening to the Naira. Because the question is, catch-22, is a weak Naira causing inflation, or is inflation causing a weak Naira? So, but these are the considerations that we're doing. One, headline inflation up to 31.7. We expect it to go higher to around 33-34% after the Ramadan. Exchange rate has appreciated by 45%. Today it's trading at 1,320. It went up to 1,915. So the Naira has become 45% stronger in a matter of 6 weeks. GDP still remaining the same numbers, 3.46. But the big elephant in the room is money supply growth. Money supply is now 95 trillion Naira. And I said it again, 95 trillion Naira. It has expanded by 79%. So if your GDP is at 3.4% and your money supply grows by 79%, ab initio, you are 73% underwater. And that is the big. So we need to tighten at this time. You can't call it choking. So, but what are the breakdown of inflation shows that 31.7% is headline inflation. That's year on year. If you bought food last year, compared to this year, it should be 31% higher. But the facts, we'll look at that in a minute. Core inflation, which is inflation less seasonalities, is 25%. But food inflation, the big stoking factor, 37%. But what are we seeing? We are seeing here that inflation begins to decline in May, June, but there's a minimum wage issue. Once you push up the minimum wage in May, which is more than likely, then inflation will not come down. So again, if wishes were horses, beggars were right. I heard the central bank governor saying that inflation is going to come down in May. God bless Nigeria. But the truth is that with the minimum wage, you are bound to have another spike in inflation. But it's not going to break the bank. It's just going to mean that we are going to have to deal with inflation over a longer period. Now, this is money supply growth. There's a positive correlation between money supply and this, but CBN is mopping up interest rate hikes. And the key decision now was that to actually increase the CRR for merchant banks from 10 to 14% and left the asymmetric corridor. So banks can actually borrow at a lower rate because the banks are actually choking. So the most important thing is, how does it affect you as an individual? And we're going to look at that. One major thing, the price of diesel. Diesel is a major stoking factor. 10% of inflation comes from diesel price. The price of diesel today is 1,100 per liter. That's what the supply price is. Well, on the retail side, it's 1,500. Dangote refinery has already started putting diesel in the market, and people are buying that in anticipation and actually bringing it down. If it stays at 1,100 and it continues to go in that direction, this will help to bring down inflation significantly. The bakers, for one, because they're funding their furnaces and their ovens with diesel, you are going to see that actually improve. So for cement manufacturers and bakers, this is good news. Now, Naira witnessed token inflation. This is where, when the exchange rate went all the way up, it led to inflation. Coming down, now that exchange rate is appreciating, it will come down, but you see in economics, say prices are sticky downwards. So we are going to see a reduction in prices, but much slower than when the prices went through the roof. So, and that's exchange rate pass-through contributes 50% to headline inflation. And that is why they're saying that is exchange rate causing inflation and inflation reckoning and reacting. So what next do we see? We saw it at 1,915 in February. 1,915 naira to $1 in February. After February MPC meeting, it came down to 1,600 naira to $1. Today it's 1,320, and it could be heading towards 1,250 very soon.
Should we be worried with that?
No. The next slide shows you that, is the naira going to tumble again? The answer to that is no, because this guy is already working on banana peelings. Why is it not going to? $7 billion of verified forward commitments have been cleared, so the central bank says. Diaspora remittances, about $1.3 billion, are likely to be coming in, but we keep that aside. Oil production is up at 1.4 million barrels a day, and foreign portfolio flows have come in because of high interest rates at 2.3. Crude oil price at $86 a barrel is good, and cocoa is now at a record high, historical high, $9,000 for a ton. The average price last year was $2,000. So we are doing 250,000 tons this year. So cocoa will bring about $3 billion if it stays this way. So it's good. The wet flow is there. The Naira is not going to tumble again. Now let's go down. This is the slide that is important. In February, a bag of rice was 80,000. It went up to 95, and now it's down to 88,000 Naira a bag. We expect by June it will come down to 85,000 because the Ramadan and fasting is over. Now, the price of a loaf of bread is 1,300. In February, it is now at 1,600. We expect it to drop to 1,400. Beans was 75,000 in February. It's 80,000 right now, and we expect it to stay at 80,000 because beans very important. Yellow gari It's 30,000 in February. It was 32,000 today, and it's going to go down to 31,000. Eggs, 3,800 in February, 4,500 for a crate of eggs today. It's going to go down to 4,000 in June. A tuber of yam stays the same. 3,000 naira for a tuber of yam. Current price 3,000. In June, it stays at 3,000. So what next to you? What does this have? The impact of exchange rate appreciation. This is where it gets interesting.
Very interesting.
Your international school fees, even though the naira is appreciated by 45%, your international school fees will not go down by more than 15%, but it's good. It's green. Cost of medical tourism, yes, it goes down by about 20%. So if you're going outside or bringing international doctors here, 20%. Your airfares, international airfares, yes, the naira is appreciated, but we expect airfares to reduce by 25%. So if you're traveling abroad, good news for you this summer. Diesel effect on intercity transport fares will stay the same, and actually intercity transport fares will actually drop. The only thing that stays the same is your house rent. Your house rent remains the same. So what does high interest rate mean? Stock market is going to dip some more. You'll see that happening when somebody comes in this evening, to talk about it. Higher borrowing costs, higher loan default rate, and increased marginal propensity to save. So in closing, the conclusion is that what next? The next meeting is May 28th and 21st. Inflation remains elevated for H2 because of the minimum wage and other things, but the naira appreciation will help it, and the diesel reduction will help it. It will moderate towards the end of the year to 23%. The MPC will maintain status quo in May, definitely. Month-on-month inflation will reduce in March, and the stable naira will attract more foreign portfolio inflows. Fiscal measures will complement monetary policy, and diesel price will fall further below 1,000 naira, thanks to Dangote. Thank you very much.
All right, Thuro, definitely we'll be keeping tabs on this as it continues.
The Easter.
Especially for the Easter, yes.
Easter is going to be flat, but after Easter comes the good news, but very, very slowly. It's too early to start celebrating, but some good news may be coming down the road.
I definitely do expect